Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Coinbase faces shareholder lawsuit alleging bankruptcy risks were downplayed. Coinbase introduces CFTC-regulated Solana futures, paving their way for a SOL ETF. Bitcoin price consolidation nears end. Analysts predict imminent breakout. EU approves 10 stablecoin issuers under MiCA, but Tether is left out. XRP price faces bearish pressure. Can bulls prevent a 30% drop? Coinbase faces shareholder lawsuit alleging bankruptcy risks were downplayed. Coinbase and several of its top executives are facing legal trouble as a shareholder lawsuit accuses them of misleading investors about the exchange's financial stability and potential bankruptcy risks. Shareholder lawsuit targets Coinbase leadership. Filed on February 18 in a New Jersey federal court, the lawsuit, led by shareholder Wenju Ogua, alleges that Coinbase violated securities laws by failing to disclose key financial risks to investors. Bankruptcy concerns. The suit claims Coinbase misled investors about the fate of customer assets in the event of bankruptcy, arguing that assets held on the platform could be classified as part of Coinbase's bankruptcy estate, potentially leaving customers as unsecured creditors. Proprietary trading allegations. The lawsuit further claims Coinbase engaged in proprietary trading, using its own funds to trade cryptocurrencies in an attempt to offset losses from falling crypto prices, a risky and undisclosed financial practice. Regulatory scrutiny. Their complaint references the SEC's June 2023 lawsuit against Coinbase, which accused the exchange of offering unregistered securities and operating without proper regulatory registration. Executives accused of cashing out millions. According to the lawsuit, several high-ranking Coinbase executives, including CEO Brian Armstrong, allegedly sold millions of dollars worth of stock, making hundreds of millions in personal profits while failing to disclose key financial risks to investors. The named executives and board members include Fred Ursum, co-founder; Alesia Haas, chief financial officer; Emily Choi, chief operating officer; Paul Gurawul, chief legal officer; Jennifer Jones, head of accounting. Board members: Fred Wilson, Mark Andreessen, Kelly Kramer, Gokul Rajaram, Tobias Lutk. Former board member: Catherine Han. The lawsuit alleges that their actions resulted in significant losses, regulatory penalties, and reputational damage for Coinbase. Legal and financial fallout for Coinbase. The shareholder lawsuit seeks monetary damages and corporate governance reforms to prevent similar misconduct in the future. Meanwhile, Coinbase is also battling a separate class action lawsuit in New York, accusing the exchange of selling unregistered securities without proper broker-dealer registration. With multiple legal battles underway, could this lawsuit further damage Coinbase's reputation and investor confidence? Coinbase introduces CFTC-regulated Solana futures, paving their way for a SOL ETF. Coinbase has officially launched Solana, SOL, futures contracts on its regulated U.S. derivatives exchange, marking a key step toward institutional adoption and the potential approval of a Solana exchange-traded fund, ETF, in the United States. Coinbase expands crypto futures offerings. In a February 19 announcement, Coinbase revealed that its CFTC-regulated Solana futures contracts are now available, reinforcing the platform's commitment to expanding the regulated crypto derivatives market. Institutional expansion. The move is expected to accelerate institutional interest in Solana, particularly as asset managers prepare for potential SOL ETF approvals. Hedera futures added. Coinbase has also introduced Hedera, HBAR, futures contracts, broadening its derivatives lineup to cater to diverse institutional and retail investors. Retail-friendly contracts. The Solana futures offerings include standard contracts representing 100 SOL and nano contracts representing 5 SOL, making futures trading more accessible to smaller investors. According to Coinbase official statement, this milestone represents a significant step in the regulatory evolution of crypto derivatives, further legitimizing digital asset markets. Solana ETFs next. Futures contracts play a crucial role in the approval process for spot ETFs, as regulated futures markets provide a stable benchmark for tracking asset performance. Several asset managers have already filed applications with the US SEC to list spot Solana ETFs, with regulatory decisions expected by October 2025. Bloomberg Intelligence estimates a 70% likelihood of SOL ETF approvals. Bloomberg analyst Eric Balchuners predicts that a futures-based Solana ETF could launch as soon as March 2025, tracking SOL's performance synthetically before spot ETFs are approved. Crypto derivatives growth and changing regulatory landscape. Coinbase expansion into crypto futures aligns with broader trends in regulatory softening toward digital assets, particularly after Donald Trump's return to the White House and his pro-crypto policy stance. In 2024, asset managers rushed to file ETF applications for Solana, XRP, and Litecoin, capitalizing on the SEC's approval of Bitcoin and Ethereum ETFs. Crypto derivatives markets have exploded in 2024, with trading volumes surging 10,950% year-over-year, according to Coinbase December report. Coinbase US Derivatives Exchange, launched in 2022, now offers futures contracts for memecoins, Dogecoin, Shiba Inu, commodities, oil, gold, and leading cryptocurrencies, Bitcoin, Ethereum, Solana, and XRP. With Solana futures now fully regulated in the US, could this accelerate institutional interest and push SOL toward new all-time highs? Bitcoin price consolidation nears end. Analysts predict imminent breakout. Bitcoin's price has been trading within a tight range for nearly 2 weeks, but market indicators suggest that a breakout could be on the horizon. Analysts believe that Bitcoin's prolonged sideways movement between $93,300 and $98,500 may soon come to an end, with technical indicators hinting at a major price move in the coming days. Bitcoin needs to reclaim $98,000 for an upside breakout. Since February 5, Bitcoin has been stuck in a narrow price range, consolidating as traders await its next move. According to analysts, the key resistance level to watch is $98,000. Crypto analyst Tyler Durden noted in a February 19 post that Bitcoin must break above $98,000 to confirm a bullish breakout. Failure to do so could lead to a downside move toward $74,000, a level that could serve as the next strong support. Gel, an independent analyst, pointed out that Bitcoin's weekly price structure is forming a bullish pennant. If BTC maintains support above $93,000, it could pave the way for a sharp move upward. Mark Cullen, another analyst, emphasized the importance of reclaiming $96,000, which represents Bitcoin's mid-range and weekly opening price. Bollinger Bands indicate imminent price breakout. Technical indicators also suggest that Bitcoin's current consolidation phase is reaching its conclusion. The Bollinger Bands, one of the most reliable volatility indicators, are showing extreme tightening, signaling that a significant price movement is near. Historically, when Bollinger Bands contract to these levels, Bitcoin experiences a major breakout within days. Previous instances. In November 2024, Bitcoin's Bollinger Bands reached similar tight levels before a 46% rally from $67,300 to $99,317. In January 2024, the bands were similarly compressed, leading to a 94% surge from $40,000 to $73,800. If this pattern repeats, Bitcoin could soon stage another massive price movement, potentially testing new all-time highs. How high could Bitcoin go? While some analysts believe that Bitcoin could still face a downside correction before a breakout, others remain extremely bullish. Gel forecasts a potential Bitcoin rally toward $140,000 once the consolidation ends. The historical trend of Bollinger Band breakouts suggests that Bitcoin could rally significantly in the coming weeks. With key resistance and support levels being closely monitored, could Bitcoin's next major move push it toward a new all-time high? EU approves 10 stablecoin issuers under MiCA, but Tether is left out. The European Union has granted approval to 10 stablecoin issuers under its markets in crypto assets, MiCA, regulatory framework, marking a pivotal moment for digital asset regulation in the region. However, the absence of Tether, USDT, from the approved list has sparked debate over whether EU regulations are fostering stability or stifling innovation in the crypto market. MiCA approval, who made the list? According to Patrick Hansen, Senior Director of EU Strategy and Policy at Circle, the approved stablecoin issuers include Banking Circle, Circle, issuer of USDC, Crypto.com, Fiat Republic, Membrane Finance, Quantos Payments, Schumann Financial, Societe Generale, StabIR, Stable Mint. These issuers have launched 10 euro-backed stablecoins and 5 US dollar-pegged stablecoins, making them compliant with MiCA regulations and eligible to operate within the EU. Tether's absence raises questions. The biggest surprise in the list was Tether's exclusion. As the world's largest stablecoin with a market cap exceeding $141 billion, Tether's absence highlights the regulatory challenges faced by non-EU stablecoin issuers. Tether has expressed frustration over the delisting of USDT from European exchanges ahead of MiCA's December 2024 deadline, with company representatives calling the move hasty and unwarranted. A Tether spokesperson told Cointelegraph in January 2025. It is disappointing to see the rushed actions brought on by statements, which do little to clarify the basis for such moves. Is EU overregulation stifling innovation? While the EU has been praised for regulatory clarity, critics argue that its strict compliance measures may hinder technological progress and drive crypto firms away from Europe. Steve Haink, a professor and market analyst, has pointed to EU overregulation as a key reason behind its lagging GDP growth compared to the US. Natalia Latka, Director of Public Policy at Merkel Science, warned that EU crypto companies may relocate to avoid MiCA's high compliance costs. However, relocating may not be easy. Latka noted that the UK's regulatory uncertainty following Brexit makes it an unlikely alternative for companies leaving the EU. With Tether's exclusion from the EU-regulated stablecoin market, will the region's regulatory policies limit crypto innovation, or will they create a more stable and secure digital asset ecosystem? XRP price faces bearish pressure. Can bulls prevent a 30% drop? XRP's price has been struggling to maintain key support levels, raising concerns about a potential 30% crash if bulls fail to regain control. The altcoin has lost momentum since reaching its recent high of $2.83 on February 15, slipping below crucial moving averages and testing lower support zones. XRP must reclaim the 50-day SMA to avoid a major correction. One of the biggest warning signs for XRP traders is the break below the 50-day simple moving average, SMA, for the second time in less than 2 weeks. This level has historically acted as a key support for XRP, and failing to reclaim it could lead to further downside pressure. Why this level matters? On February 2, XRP fell below the 50-day SMA at $2.61, closing at $2.57 after losing support. The same SMA had provided support for XRP since November 10, 2024, when the altcoin launched into a 500% rally after reclaiming the level. XRP briefly recovered on February 14, only to fall back below the moving average 2 days later, reinforcing the bearish trend. Historically, XRP has experienced strong upward momentum whenever it reclaims the 50-day SMA. In July 2024 and September 2024, breaking above this level led to 35% and 18% price rallies, respectively. According to MacAttack XRP, a popular crypto analyst, XRP is now testing critical support at $2.40. The analyst suggests that a move above the 50-day SMA could signal a strong rally, pushing XRP back toward its long-term trading range of $1.20 to $4.20. Bearish continuation pattern signals a potential breakdown. From a technical perspective, XRP is currently following a bear flag pattern, which indicates that the asset is at risk of continuing its downward trajectory if key support levels fail to hold. Key technical factors to watch. The bear flag formed after XRP's drop from $3.13 to $1.76 between January 31 and February 3. The altcoin has since been trading within an ascending parallel channel, with $2.50 acting as a key support level. If XRP breaks below $2.50, the bear flag pattern suggests a possible 32% correction, bringing the price down to around $1.73. Analyst CrediBull Crypto has also warned that XRP's rejection above the 50-day SMA could lead to a deeper correction toward $1.77, reinforcing the bearish outlook. Will XRP bulls regain control or will the downtrend continue? With XRP struggling to maintain its key moving averages, the question remains: will bulls be able to push the price back above the 50-day SMA and trigger a rebound, or is the market preparing for a deeper correction toward $1.70?